Hello, chart watchers. Welcome to this Wednesday, July 17th, 2019, Chartwise Women's Show with your hosts, Erin and Mary Ellen. We are so glad you are joining us today, and we hope we will see you back every Wednesday at 3 p.m. Eastern. For those of you joining us for the first time today, welcome to the show. And for our regular viewers, all two shows of them, welcome back. All right, Mary Ellen, here we are, number 3.
I'm liking it. I think we are on a terrific path. Of course, our goal here is to educate, simplify the markets in an engaging fashion with an eye toward empowering, and I think we are on our way.
Absolutely. And, for those of you who don't know, both of us have been in the business quite a while. Mary Ellen came from the research money manager side. I came up through the educational side. We've got plenty of years of experience, but we want to just sort of turn everything into an easier to understand, more inviting sort of models and sort of information on how even a beginner at this point could start doing the market. But there you go. Wisdom of the week is going to start us off. Rinse and repeat. And all that glitters is gold. Of course, talking about gold and how to date the perfect stock for you. We'll talk a little bit more about what that means later. Our toolbox, we're going to introduce the blue line. And then we, of course, like to finish with, yeah, that happened. So let's go ahead and get started. I'm going to give you a quick market review so far today. The market is still open. So I wanted to give you just a shot of what we're looking at right now. So the markets are down today, lots of red going on. Dow is down over 0.25%. The S&P 500 is lower and trying to get down there and back to those intraday lows. NASDAQ was making a comeback, but once it hit yesterday's close, it just turned right back down. New York Stock Exchange in general is getting ready to hit some intraday lows. Mid caps and small caps not doing so great, with the Russell 2000 really suffering the most right now, down 0.6%. Treasury yields are falling right now, 2.061%. Our VIX, this tells us whether people are complacent when the numbers are low or whether they're worried when the numbers get high. And we're starting to see a little bit more bearishness out there among the traders and investors out there. UUP, the dollar is down, and that means that gold is up. Typically, they do run opposite of each other. Oil at this point is lower, continuing lower, making new intraday lows. And TLT, the 20-year bonds, are rising right now. So bonds are looking pretty good, at least today, but nice rising trend going on right now. All right, so that is what our market is looking like. Let's go ahead and move right on into our wisdom of the week. And so Mary Ellen and I sit, and when we brainstorm, we try and think of something that we'd like everybody to know. And my wisdom of the week is know the direction of the market. And I will show you some very easy ways to understand that. And Mary Ellen?
Yes, and mine has to do with getting prepared for those markets when they open. In addition to knowing the direction of the market, I argue that that it is very relevant that your hardest work will be done while the markets are closed. You want to set up your system so that when the alerts come up, you are prepared. So get that work done, whether on a daily basis or on a weekly, depending on your style of investing.
Yeah, absolutely. And, I think these really go hand in hand. And that's why our next segment is called Rinse and Repeat. Because with any kind of homework or learning, you pretty much have to go and learn and then apply, learn, and then apply. So that's sort of where we're going to go with the rinse and repeat segment today. Mm-hmm. And I think what I'm going to start off with, and then I'll let you finish up the segment, but I'm going to start with just how do you find that market trend? How do you know what that market trend is? And really, why should you know what the market trend is? And honestly, if you're going to get out there and invest, do you really want to go out there like we were seeing last November and December when the market was really weak and it was heading down? Sure, there's areas of the market that are moving up, but there are plenty that are moving down. And so you're really swimming against the current, I guess is what I would say. So it's really important to understand just the overall market. And if you look at our dashboard here at stockcharts.com, here's your daily view. And like I said, I went over all of those markets for you, and you can see exactly what's going on. But of course, that's just today. So if you want to get a little bit closer look at what's going on, you can click on that chart, and it's going to give you a view in the 10-minute bar chart. At least this is how I've set mine up. And you can see what's going on just in the last week with the market. But most importantly is this daily view. And I'm going to take this over here. I'm going to put it in a nice chart that's nice and big so we can all see it. So what you're looking for is, again, here's that November, December timeframe. And we're going to talk more about the blue line, but the blue line started to turn over. That's 50-day simple moving average. As soon as it dropped below it, you knew that something wasn't going really good in the market. That's your time to evaluate whether you want to stick it out. And honestly, I know with me, I waited a little bit before I got out. So I did take a little bit of a loss back here when I did get out and move to cash. But I did avoid, I did avoid that Christmas Eve surprise that we had with a really deep decline. So I think it's really important that you know which way the market's going so that you can, figure out where you want to go. What would you do next, Mary Ellen?
Yeah, so what I wanted to share with you and give a little more, shed a little more light on the rinse and repeat concept is with an eye toward looking at stocks. Pretty much every stock is going to go through a period of accumulation, topping, and then going bottoming, and then coming back. And so that's when I talk about rinse and repeat, it's with that eye toward each stock is going to go through this period. So heightening your review of the broader markets, of course, you want to know where the broader markets are. That's going to be a very key component. But this is that nuance and I talk about as far as stocks coming under accumulation, and you can use this for sectors as well as individual stocks. We're looking at XLK, which is the technology sector. We can see a super strong uptrend. This is the beginning of the year where it peaked in May. May was a tough period for the broader markets, but this is that period of topping out and distribution that occurs again and again. While this is painful, this was a significant pullback. In essence, it is a very, very healthy, what we call rinse and bottoming, and then a new cycle begins. And that's where we are now. So that is that concept of rinse and repeat, because now we have a new cycle that is occurring. So once you have uncovered the fact that this stock, and we've talked last week about uncovering one of your exit strategy, we're going to refine that even further for you so that you can know that the uptrend has ended and you can exit. This is that distribution, and further down the road, we'll discuss more about these entry points. But let's take a look at individual stocks. Now, this is a stock that is in the technology space. And what I'm pointing out to you again is that peak in price. The stock goes through this accumulative phase, then it tops out, distribution, and a bottoming. That's that rinse and repeat. Again and again, you'll see this cycle relive and go through. Here's another period, uptrend, pulls back to this 50-day simple moving average, and again and again. So as I mentioned, yep.
So Mary Ellen, when we talk about accumulation and distribution, for those who aren't familiar, accumulation means what? Investors are buying it. They're accumulating it.
Absolutely. That's telling you that there are more buyers than sellers, really very simply, and that buying pressure is going to push the stock higher, unlike a period when those sellers come in. And during our first show, we did a wonderful piece all about the volume and the importance of volume. And that is a key contributor to that accumulation versus distribution phase. Quite simply, it is more buyers and sellers and more individuals that are actively engaged in that stock. So that is what we are talking about. So these stocks have an uptrend, peak, falter, and then come back into play. This is another pullback with Amazon. It was in a very significant uptrend under accumulation. We can see the blue bars, the volume higher than the red. So in essence, the stock is under accumulation during this up phase. We're going to review that exit plan a little more, but this is a very common occurrence where stocks, the markets, sectors will pull back and then resume their uptrend. And again, this uptrend here, your blue bars are a bit higher than the red, so that is back into an accumulative phase. But again, more to the point, this rinse and repeat cycle occurs again and again. So as we get into the tool box and start revealing to you very simplistic but powerful tools to help you identify that peak, identify that trough, that's going to be really quite powerful for your work. So that's our rinse and repeat, and we will be right back in just a minute.
All right, we are back, and our next segment we want to talk about is all that glitters is gold. And I have to say, recently, gold has been shining brightly. So I'm going to give you just a quick peek at gold in general, because I know even those of you who aren't totally familiar, gold has been pretty much, let me go ahead and show my screen. So I'm going to give you sort of an overview of gold itself. And then I know, Mary Ellen, you've got some stocks, I think, in particular that you wanted to look at. Mm-hmm. So this is a weekly chart. So you can see it goes from the end of 2012 all the way up to where we are here in 2019. So this is what you would call an intermediate to long-term chart. So this is just to give you an idea of what's been going on with gold, if you aren't familiar, over the past, I would say, 5-6 years. And the main thing that was noticeable is that we really were staying within a trading range. Price was moving back and forth just within this range. And so that's the trading range. And, you can see when you get these breakdowns and moves up, but here's why everybody's so excited about gold right now. We were in this range for a very long time, and then gold just started to take off. And with that, we finally broke out of that trading range, but now it's kind of stalling out a little bit as far as the intermediate to long-term picture. I don't think it's over necessarily. I think that we talk about flag formations. You can see that like a flagpole here, and then that's the actual flag. Usually when you see that, it means you're going to get more upside movement. Because think about it, you had this really powerful move to the upside, and then it's like, whew, I need to take a breath. We need to consolidate this move. Let me figure out what I want to do. And so once they do that, you get that consolidation. You have people who sell their stocks, take some of that profit. That's where you get that that area right there in the flag. So what I did want to show you is just the fact that gold right now is kind of stalling out a little bit, but I don't think it's over. I still think that you could see a breakout here from that area of what we call consolidation, or in this case, the flag itself. So I would be watching. I still think we can get gold above that 1450 level. So I think this still might be a good area to consider investing in. It's looking pretty good right now. So what are you looking at, Mary Ellen, as far as stocks in that area?
Yeah, let's take a look, because these gold stocks, there are a lot of people that specialize in these this area, and they're quite bullish on the prospects. I'm going to share with you, for those of you that perhaps don't have the resources or the time, these are going to be some gold ETFs that are going to participate. The first one we're looking at is a Van Eck Gold Miners ETF, GTDX is the ticker symbol. We can see it's up almost 3.5% today, so a really big pop. When we see this kind of a big move, you want to go back historically to other periods and witness what occurred. Oftentimes you will get the stock dropping or pulling back. That's what I reviewed earlier, that this other technical indicators that we're going to share with you down the road are going to help you as well. But let's look at a couple of other ETFs that we can utilize rather than drill down and look at individual stocks. This is GLD, the S&P 500 gold shares stock. So in other words, this ETF is comprised of major gold related companies. And this is a little more orderly. It does look attractive. And Erin, I'm next going to use our special chart because I did not do that, but if you were to use that, that would be very helpful. One last name that we can look at that is a significant, and by that I mean it has liquidity, ETF. This is another S&P, and this is the Gold Mini Shares Trust. And a very similar look, because we can see this June was a big month for these gold stocks. They pulled back. Traders are coming in today and they're buying this dip. I talked about volume, and we could very well see this. The gold stocks do appear poised to trade higher, and that is all that glitters.
Sparkly.
Yes.
Yeah, gold I
Sparkly.
think is really definitely on the shine there.
Very attractive. So go right ahead.
Oh, no, I'm going to let you introduce this.
Yes, wonderful. So this next segment, we're calling it How to Date the Perfect Stock for You. And really what we are doing here is, for those of you that perhaps are not very interested in the broader markets, you find it not as fascinating as Erin and I do, we would urge you to find an area, whether it is of the economy or within the consumer space, an area that appeals to you, that you can then, when looking for individual plays within that area, it's going to be a bit more appealing to you. So what I wanted to do is share with you, using StockCharts.com, precisely how you can go ahead and uncover potential candidates within the not just the markets, but certainly within drilling down even further. So what I'm going to do here is go ahead and take you to what is called the sector summary. The broader markets are broken down, of course, into 11 sectors, and from there you can then utilize the tools that we are going to be sharing with you over these coming weeks so that you can uncover candidates that are of interest to you. So for my work today, I'm just going to dip right in here into consumer discretionary. And from here, for me, I enjoy traveling. That's a real bonus for me. It's something that I certainly enjoy doing. So what you can do is go ahead into that travel and tourism as an example sub-industry group among consumers. Go ahead and sort it by this StockCharts technical rating. And up here in the top, you will get your most technically sound companies, and then you can utilize again those tools and access the chart to make your decisions. This, of course, is Expedia, a travel booking company, and we can see that the stock is very much in an uptrend. Erin, I'm going to ask you to share your dating experience with various stocks.
Well, you know, a lot of women we found like to invest in you know, areas that they feel strongly about. And, you know, travel is one, you know, you save up for travel, and also, you know, you might want to go in there and look at those types of stocks. And Mary Ellen told you about it. For those environmentally conscious folks who maybe want to get into that renewable energy, solar, I would recommend, this is just from that front page on our site. You can just go in. I always go to a table view. It's just a little easier for me. And I want renewable energy, right? So I just start typing renew. Oh, there it is. Renewable energy. In this case, this is the equipment industry group. So obviously you can't invest in an industry group, so to speak, but you can go in there and start looking like you did for the stocks that are in that area that are interesting to you. And as Mary Ellen said, if you just organize it by our StockCharts technical rank, that's going to give you the ones that are likely to do well. And you're not going to end up with some of these very small volume stocks or low price stocks, which can be very scary and volatile when you get into them. So full disclosure, I'm going to say I do own Sunrun right now. And wow, nice day. I'm going to put it in our little Chartwise women setup here. I got in pretty early. I'm just loving the stock. Got in probably right around here when we would have gotten that entry signal for Sunrun. And again, we're using that pink and blue line, which we'll talk a little bit more. It's telling me things are still good, not to get out. So at this point, I'm hanging on. This is sort of an intermediate term system, so I'm pretty happy with it. But if you wanted to look at something else, like I said, it's very easy to go in and see. Enphase has been doing even better than Sunrun, and when we look at it as far as the blue and pink lines, boy, this one could have been an excellent entry right back here. And with this system, you'd still be holding it. And my goodness, I'm not so sure how much you would have, but you would have quite a bit of a gain at that point.
It looks like it tripled.
Yeah, at least. So the thing is, guys, with some of these renewable energy stocks, they do tend to be a little bit volatile. You'll get some great stuff out of them, but not always. And when they go down, they can go down very quickly, as you can see back here. All right, I think we should go ahead and move into Toolbox, and we're going to talk about our blue line, which is going to go with that pink line. So I'm going to let you start it, Mary Ellen, because I know this is really an important piece of your analysis that we
absolutely. And I'll tell you why. This blue line, and it's going to be all about helping you time your entry and exit point. This is a 50-day simple moving average. And for many years, I worked with top portfolio managers, analysts. These are guys running billions of dollars. This is a key metric that they pay attention to. So with that, I feel it's very important that self-directed investors are aware of it, because these big guys, they're creating these charts. If they see this price break below this blue line, this is our secondary indicator as an exit after it drops below the pink line. For those of you that didn't see it, please take a look at last week's review. We went into this pink line, the relevance of breaks above and below it. But once it breaks this blue line, that is all bets off. We're looking at a daily price chart of Facebook, and we can see once it broke below, this is more recent. Ideally, I would like to take you back to last August when it broke below. This is that big antitrust issue back here, broke below both the pink and the blue. Take a look at the significant downtrend subsequent to that break. So that is that 50-day. Again, institutions abide by it. You will want to also have that in your tool belt.
Excellent. So now you've got an idea of that blue line. Basically, it's like you learned in school as far as a moving average. You total everything and divide by the number of days. So you've got price for 50 days. You divide it by, you add, well, you know what I mean. You add it all and then you subtract, or then you divide by the number to get your simple moving average. So I'm going to share with you just a little bit about combining the two. And I did write about this in Chart Watchers. So if you go to our articles tab and click on Chart Watchers, I showed this particular chart in it and the other one that I'll just quickly go through. But right now, what we're looking at is both the pink and the blue line. Like Mary Ellen said, we only introduced the pink line. That's actually what we call a chandelier exit, which I think is such a great name, but it's a lot longer than pink line. So, but using the system, if you had gotten in back here where price had crossed above both the blue and pink lines and you held onto it, the exit wouldn't have occurred until all the way back here. Now, granted, you'd be giving up these profits that were here, but you know what? We're looking for gains. We want gains. So, I'd be pretty happy with a 63% gain. But basically, once it fell down below that blue line, in addition to the pink line, that was the time, okay, we got to get out. Now, when do you get back in? Well, that blue line is heading down very quickly. I don't want to, it's like the market. You don't want to get in there too quickly while it's trending downward. It's swimming against the current, like we were just saying. So you don't want to do that. We have to wait until we get over here when the price gets above both lines and we're seeing either a deceleration or a move to the upside on that blue line. Once you have that, then you get in. And in this case, it went below both, right? But actually the close was still above it. So you get to hold on to it still, and you keep holding on to it. It drops below the blue, but not the pink. And you keep holding it, and you don't exit here either. And really, right now, you would be still holding AMD. So I think that's it's a pretty interesting system. This is not foolproof. I have not back tested it yet, and that's what I'm working on right now. But I think this is going to be a pretty robust model with only a couple of indicators to get you through it. So I think that pretty much covers our blue and pink lines for the day. But we always like to end with that fun segment.
You bet.
That happened. And
yes,
Mary Ellen, you usually come up with some good ones here. What are you looking at as our?
Well, it's thanks to the market and what we like to call fat fingers. This happened yesterday. A fat finger caused Bitcoin to plunge 12% in minutes, and it closed the day. Quite simply, a trader added an extra couple of zeros, and the rest is history. As I like to say, Erin, I think you're going to be reintroducing your aerobics for fingers program. So
yes.
for those traders that have those fat finger syndrome.
Yes, exactly. I have some great exercises for that. But it's funny. This isn't like the first time I've seen this happen, and I believe it was in May of 2015, where the whole market took a huge dive, and it was just surprising everybody. Nobody could figure it out, and later they basically decided it was a particular trader to a big time money manager with a lot of money and an extra zero. And the next thing you know, what happens is it triggers everybody sell. Everybody starts to sell, and then it just goes from there. It just keeps going. So that was pretty interesting. I remember that back in May. So it's not like this is a new thing. It actually can happen.
That's right.
And honestly, if you're managing that kind of money, I just don't understand how you could do that. But
do not look at your phone and text while trading. How about that?
Yeah, I think that's a pretty good way to look at it. But anyway, we're already to the close of our show. It's only a half hour, and you can tell we have lots to cover and lots to show you, and we can't wait to do that next week as well. So I'm going to say goodbye. I know, Mary Ellen, you've got a few goodbye there.
Yes, absolutely. Thank you for everyone who stopped by. And again, go back to those previous shows and you can follow along with our new system.
Absolutely. And, I do want to thank all of you for joining us here today, especially those who are watching live right now. For Chartwise Women. Do complete that survey as you exit. It's to the right of your viewer right now if you are watching live or even recorded. And we read every single comment, so we'd love to hear those. And we really would like to know if there's anything you'd like to see covered. But for now, have a happy Wednesday and happy trading.